Let's talk about high-yield savings accounts, or HYSAs for short. If you've been hearing that term a lot lately and aren't exactly sure what it means or why everyone's talking about them, don't worry, you're not alone. We're going to rank some of the most popular options in just a bit. But first, let's lay the foundation. What is a HYSA? A high-yield savings account is just like a regular savings account, but it pays you more interest. That means your money grows faster just by sitting there. While regular savings accounts at a big-name bank might give you 0.01% interest or basically nothing, a HYSA can give you 3% or even 4% or more in some cases. It's like your savings got a raise. Why are they better than traditional savings? The biggest advantage is the higher interest rate. Let's say you keep $5,000 in a regular savings account with a 0.01% rate. You'd earn only about 50 cents a year. And that's not even enough for an Arizona iced tea. But with a high-yield savings account paying 4.5%, you'd earn around $225 in a year. Same money, just a smarter place to park. What's it for and not for? Now, a high-yield savings account is best for money you want somewhat easy access to, but need to keep some distance from, like your emergency fund or savings for short-term goals like travel, a new laptop, or holiday shopping. It's not the right place for long-term investing like retirement, or for money you'll need to move around every day like a checking account. If you're more of a spender than a saver, create distance between your high-yield savings account and regular checking account. This will increase the likelihood that once you save the money, it stays there. How is it different from a checking, CD, or retirement account? Here's a quick comparison. A checking account is for everyday use, paying bills, buying stuff, swiping your debit card. A CD, or certificate of deposit, locks your money in for a set time, like 12 to 24 months, without you being able to touch it. That is key, and gives you a fixed interest rate. A retirement account, like a 401k or IRA, is for long-term investing. It can grow a lot over time, but it's harder to access without penalties. And a high-yield savings account fits perfectly in the middle. It earns good interest and stays flexible. You can still move money around if needed, but it works best when you let it sit and grow. Saving money is important, but letting your savings work for you is even better. A high-yield savings account makes your money grow without any extra effort. And because the money stays safe and insured, usually up to $250,000 with the FDIC, it's a smart step for building financial security. Having a HYSA that you save money in regularly is a sign that you're financially above average. Most importantly, it means that you're prepared for surprise purchases or financial emergencies when they happen. Why high-yield savings accounts rates change? Rates change. The interest you earn from a high-yield savings account is not set in stone. It can go up or down over time, and that's not just because the bank feels like it. These changes are closely tied to what the Federal Reserve does with something called the federal funds rate. That's the interest rate banks charge each other to borrow money overnight. As a matter of fact, our current Federal Reserve chair announces whether the funds rate will increase, decrease, or stay the same. Take a look.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments.
When the Fed raises the rate, usually to fight inflation, banks tend to increase the interest they pay you on savings. When the Fed lowers it, often to stimulate the economy, your rate might drop too. So while today's rate might be 4.5%, it could rise even higher if Fed hikes rates again, or it could dip if the Fed lowers them, also called a pullback. The key thing to know is banks follow the Fed's lead, not the other way around. That's why HYSA rates shift even if you don't see any big changes in your own bank's app. But even when rates go down, HYSAs usually beat traditional savings by a long shot in comparison. If you've got extra cash just sitting in a regular savings account or worse, checking, it's probably time to upgrade. A high-yield savings account gives your money a quiet little job while doing nothing. No risk, no fancy moves, just a smarter place to grow your savings. All right, Now that you know what a high yield savings account is, how it works, and why it's a game changer for your money, the next question is, which one should you choose? The truth is, there are a ton of options out there. Some you've probably heard of, like Marcus, Ally, or SoFi. Others might sound completely unfamiliar, like Bask and Betterment, but still offer some of the highest interest rates available right now. To make it easier, I've put together a list of 14 of some of the most popular high yield savings accounts that people really love for their high interest rate, low or no fees, or minimum balances, including a few hidden gems that fly under the radar but could earn you even more. Let's take a look at how they stack up against each other. This is Gage St, your financial safe space, encouraging and empowering career professionals to manage money intentionally. If this resonates with you, subscribe for frequent uploads. My name is Free, and you're important to me. Robinhood's brokerage cash sweep account. Okay, first up is Robinhood. Yes, the same app a lot of people use for trading stocks and crypto. But did you know Robinhood also offers a place to stash your uninvested cash? It's called a brokerage cash sweep account. Now, here's the important part. This isn't a traditional high-yield savings account. Instead, Robinhood takes your idle cash and sweeps it into a network of partner banks behind the scenes. These banks then hold the cash and pay you interest, kind of like a high-yield savings account in disguise. Right now, Robinhood is offering 4% APY for Gold members and about a 0.025% for everyone else. So yes, that top rate is impressive, but there's a catch. You'll need to pay a $5 a month or $50 annual subscription for Robinhood Gold to get it. Make sure your interest earnings justify that fee. Here are a few things to consider. Robinhood is an investment-first platform. Savings is an afterthought, and you can tell by what they promote and market. No minimum balance required to earn interest, but your money isn't kept in a savings account. It is still part of your brokerage account, so the protections and structure are a little different. Customer service is okay, but limited, mostly through the app or online. So if you're used to calling someone directly at a bank, this may feel a bit different. And in the fine print, your cash is only FDIC insured once it reaches the program banks, not while it's sitting in your Robinhood brokerage account. Also, interest is only paid on cash, not on money you've invested. Now, here's some advantages. This is one of the highest available, if you're a Gold member, of course. Does provide instant access to invest your money when you're ready, although that's not really what the savings account is for. There's no account minimums or transfer delays. And because Robinhood partners with program banks, up to $2.5 million of your money that's in those program banks will be FDIC insured. Now, here are some disadvantages. This does require the monthly fee to get the highest rate of 4%. And it's technically not a savings account. You're using an investment product. Robinhood itself is not an FDIC insured bank. Insurance and protections are different from regular high-yield savings accounts. So if you're someone who's already investing in Robinhood and don't mind the subscription, this could be a good way to keep your cash working harder. But if you're just looking for a place to park your savings and forget about it, there might be better fits out there. With all this in mind, I'm going to rate Robinhood a D because of the fee, account type, and less than ideal customer service. Cash App Savings Account. Next up is Cash App. Another name you probably know from sending your friends money or getting direct deposits early. But now, Cash App also offers a high-yield savings account feature right inside the app. As of now, the APY is around 4%, which is pretty competitive, especially considering how easy it is to use. You don't need to download a new app or set up a new bank account. However, there are a few hoops you have to jump through to get that 4%. You must have a Cash App card, direct deposit $300 or more each month, not transfer. There's a difference. And then keep depositing paychecks. You can't just do it one time. Let's look at some of the details. There's no monthly fees to use this savings feature. There's no minimum balance required. Whether you've got $5 or $5,000, you'll earn interest. Customer service is mostly through an app, chat, or email, and it can be slow to respond at times according to some users. Here's what's in the fine print. The savings account is not currently FDIC insured directly through Cash App, but rather through their partner banks. Also, if you don't verify your identity or use direct deposit, your access to some of the features like the higher rates might be restricted. Here's some advantages. It's super easy to use, especially if you already have a Cash App card. No fees or balance requirements. There is a competitive interest rate and you can set up savings goals right in the app. Here are a few disadvantages. Customer service can be spotty or slow. Not a standalone bank, so you're depending on partner bank protections. and some limitations on features based on the account setup and ID verification. You must jump through a few hoops to take advantage of the full 4% rate. So if you're already using Cash App and want to start building savings without opening a whole new account somewhere else, this is a low barrier, beginner-friendly option. Just be aware that it doesn't offer the same level of support or protection as a full-service bank. I'm not a fan of jumping through hoops. If you're offering a high yield, then give the person the high yield. So for that reason alone, I'm rating this a D. Wealthfront Cash Account. Wealthfront is known for its robo-investing features, but its cash account is a hidden gem for savers too. This is technically a cash management account, not a traditional bank account. But don't let that scare you off. Here's how it works. Your money is swept into a network of program banks, currently up to 20, that hold your cash and pay you interest. That sweet setup gives you FDIC insurance coverage up to $8 million. Yep, you heard that right. Right now, Wealthfront's cash account offers a 4% APY, no subscriptions, no gimmicks. With this account, you can create cash categories to customize savings for specific goals. Here's something to keep in mind. Because this is not a savings account, but instead a cash account, you can actually get and use a debit card. If you're trying to stash money away for a goal in the future and not have easy access to your growing savings, getting that debit card might be a recipe for disaster. But here's what you get. No fees and no minimum balance to open or earn interest. Up to $8 million in FDIC insurance through their network of partner banks. Customer service is email-based with a helpful knowledge base, but there's no phone number for immediate help. Cash categories or savings buckets, and what's in the fine print? Funds are not held by Wealthfront itself. They're swept into outside banks. That means your money may take a business day or two to transfer out if you're moving it back to a checking account. Now, here's some advantages. There's an extremely high FDIC insurance coverage, up to $8 million. Competitive APY at 4% with no monthly fee. Great for stashing larger amounts of cash. Clean, modern user interface with automated features like savings goals. Few disadvantages, there's no human phone support, and transfers may take 1 to 2 business days. So if you want to earn high interest and categorize your savings, Wealthfront's cash account is a strong, secure option. Especially good for emergency funds, travel savings, or a down payment you're planning for. I actually know a few people who use this high yield option, primarily because of their competitive rate and the cash categories feature. So I'll rate this one a B. Betterment Cash Reserve. Betterment, like Wealthfront, is mostly known as a robo-advisor, but its cash reserve feature acts like a high yield savings account, and it's super easy to set up and manage through the app. Betterment also uses a program bank model, sweeping your cash into multiple partner banks to increase your FDIC coverage, up to $2 million in protection as of right now. As of now, Betterment Cash Reserve offers a 4% APY, and again, there's no monthly fee required to earn it. So let's break it down. No minimum balance or account fees, FDIC insurance up to $2 million via partner banks, customer service is email and chat-based with priority support if you're a paid investing client. And here's some fine print consideration. Like Wealthfront, this is a cash management account, not a savings account. Transfers may not be instant, and funds are not held by Betterment directly. There is a competitive 4% APY with no fees or minimums. The FDIC insurance is well beyond the standard $250,000, and Betterment does allow unlimited withdrawals. There's a nice app experience with automation features like auto deposits and savings goals. And it's easy to manage alongside your investments if you're already using. Now, here are some of the downsides. It may take 1 to 2 business days to transfer money to and from external accounts. There's limited support, mostly through chat and email. Betterment Cash Reserve is great for hands-off savers who want a simple, smart way to grow their money with a modern interface. Just know, this isn't for spending. It's built to sit, grow, and be ready when you need it. So with all this in mind, I'm going to rate Betterment an A, because of the simplicity and high rate. It gets right to the point of the purpose without the gimmicks, and I can appreciate the direct approach. SoFi High Yield Savings Account. All right, next is SoFi. Yep, the same company known for student loans and investing, but their high yield savings account is competitive right now. The current APY is around 3.8%. There's no minimum balance to open the account and no monthly fees. FDIC insurance is up to $2 million via partner banks. The customer service has a solid app, decent support, plus member perks like financial planning sessions. Here's what's in the fine print. You only get that high APY if you set up direct deposit. Otherwise, the rate drops significantly. It's technically a cash account, not a standalone high yield savings account. So your money is swept into program banks. like with Wealthfront and Betterment. You will automatically receive a checking account when opening a SoFi HYSA, which is something I actually caution people against if you are an impulsive spender. The access to your savings is just too easy with that checking account. SoFi offers savings vaults, which is similar to cash categories like Wealthfront. The vaults allow you to create savings categories. Best for people who want a well-known brand, prefer having savings vaults, and don't mind a slightly lower rate and setting up direct deposit. I don't mind the lower rate, but I'm not a fan of the direct deposit requirement. For these reasons, I'm going to rate SoFi a B. Quick pause before we jump into the next account, because you might be wondering, what's with all these program banks? Great question. Companies like Robinhood, Wealthfront, and Betterment aren't traditional banks. They're fintech companies or investment platforms. And since they can't hold your money directly the way a regular bank does, they partner with FDIC-insured banks to do it for them. That's where the term sweep program comes in. Your cash gets swept or moved behind the scenes into one or several of these partner banks that actually hold your funds. But why do they do this? It lets them offer you higher insurance limits, often up to $2 million or more, and stay compliant with banking regulations, all while focusing on the tech experience they're known for. But here's what you need to keep in mind. Transfers in and out can take longer than with a traditional bank, and you may not even know exactly which banks are holding your money at any given time, unless you dig through the fine print. It's a green flag if they self-disclose which program banks they actually use, like Better does. Next up, we're going to look at more traditional high-yield savings accounts, the kind you find at an online bank that's actually FDIC insured directly. These usually offer a little more flexibility and are easier to use. American Express high-yield savings. You probably know Amex for their credit cards, but their online savings account is a hidden gem. The current APY is about 3.5%. Actually the lowest on this list, but the minimum balance to open is $0 and there's no monthly fees. And direct deposit is not required. Yes, this savings is FDIC insured up to $250,000. And because Amex is a very well-known and reputable brand, customer service is provided via phone support. Now here's what's in the fine print. Transfers can take 1 to 3 business days, and there's no mobile app just for banking. You'll use the same one as for their other card services. It's best for folks who want a trusted brand and a true high-yield savings experience without all the bells and whistles. The low 3.5% rate, lack of savings categories, and transfer times makes this high-yield savings account a C, in my opinion. Let me know if you rate this high-yield savings account higher or lower, given what we just discussed. Discover Online. Behind the scenes, Discover encountered some rough times a few years back, but were recently acquired by Capital One in 2025. While still keeping their branding, name, and logo. So as a customer, you probably didn't notice a change because their cards and other bank products still exist. What they're probably less known for is their high-yield savings account. If you like the idea of a traditional bank with great online features, Discover might be your move. The current APY is around 3.5%, but there's no minimum balance to open, no monthly fees or overdraft charges. And yes, it is FDIC insured up to $250,000. Customer service is 24/7, US-based phone support, and highly rated. But here's what's in the fine print. There's no physical branches, as you know. There's no Discover banks out there, like some others on this list. And like most online banks, there's a limit on how many withdrawals you can make per month. This savings is best for people who want a familiar name with great support and simple terms. So if you can appreciate a comeback story, an underdog brand, that's Discover. Although they have similar features of other high-yield savings accounts, even considering their recent difficulty, I can't get past the lower rate. If they were truly trying to stake their claim in this high-yield savings account field, they should offer a better rate to get more customers. So all things considered, I'm ranking Discover a C. Ally Bank High-Yield Savings. Ally's been a favorite in the online banking world for years, and for good reason. They designed their app and banking products to be very user-friendly. The current APY is roughly 3.5%, but there's no minimum balance and no monthly maintenance fees. And yes, it is FDIC insured. Customer service is 24/7 via phone, chat, and Twitter. Ironically enough, they let you set up buckets to divide your savings into categories like emergency fund, vacation, without opening separate accounts. And here's what's in the fine print. It's not the very highest interest rate on the market, but Ally makes up for it with usability, reliability, and features. It's best for people who want to organize their savings goals and still earn a decent return. In my opinion, Ally is just okay, but with one of the lowest rates on this list, it's getting a C. Marcus by Goldman Sachs. Next is Marcus by Goldman Sachs. It's got strong branding and a loyal following. Goldman Sachs is a global bank known for its institutional reputation. The current APY is around 3.65%. There's no minimum balance and no service fees. And yes, the savings account is FDIC insured. Customer service, good phone support, but no physical branches. And here's what's in the fine print. You can link external accounts easily, but like Amex, there's no ATM access or checking features, which is actually a good thing. It's a savings-only setup. It's best for those who want a pure savings account from a big-name financial firm. It's not the lowest rate on the list. It gets straight to the point like American Express and Betterment. There's no gimmicks or hoops. So all things considered, I'll rate Marcus a B. Capital One 360 Performance Savings. If you already have a Capital One credit card or checking account, their 360 Performance Savings might be a smooth add-on. The current APY is around 3.5%. There's no minimum balance and no monthly maintenance fees. And yes, it is FDIC insured up to $250,000. Regarding customer service, it's a great app and 24/7 support, plus a few physical locations if you prefer in-person help. But here's what's in the fine print. There aren't any surprise requirements. No need for direct deposit or high balances. But while the app is user-friendly, some users say the interface feels a bit basic compared to other fintechs. It's best for anyone who wants a big-name bank with both digital tools and optional in-person access. I'm rating the savings a C for having the lowest rate on the list and a basic interface with the app. CIT Bank Savings Connect. CIT Bank isn't super well known, but they offer one of the highest rates in the market. You may know of First Citizens Bank. CIT is a division of First Citizens. The current APY is around 3.9%. There is a $100 minimum balance to open this account, but there's no monthly service fees. And yes, the savings is FDIC insured up to $250,000. Side note, $250,000 is like the federal requirement. So most banks will insure for savings products up to $250,000. Regarding the customer service, there's online and phone support only, no physical branches. And here's what's in the fine print. To get that high rate, you'll need to either make a $200 deposit monthly or maintain a decent balance, although it's not explicit on what decent means. Also, the bank is 100% online, so it's not ideal if you're the kind of person who wants to pop into a branch. It's best for folks who want to maximize returns and don't mind managing everything digitally. They had me until I saw the $100 minimum balance to open an account. Nowadays, $100 is not a lot of money, relatively speaking. However, the required minimum should be $0, period. So CIT Bank gets a C from me. Everbank Performance Savings. Everbank, recently rebranded from TIAA Bank, is another lesser-known name that packs a punch when it comes to high-yield rates. The current APY is around 4.3%. Yes, really, but only for new accounts, and is actually the highest rate on this list. There's no minimum balance and no monthly fees. And yes, it is FDIC insured. Regarding customer service, there's phone support is available. The app is decent, but not flashy. And here's what's in the fine print. This high rate may apply only to new accounts for the first year. So after that, the rate might dip. Now, what I didn't see in the fine print was it explicitly stating what the rate would dip to. So be sure to ask if you decide to go with this product. Plus, there's no branch access and user reviews on the mobile app are a bit mixed. It's best for people chasing one of the top rates, especially if they don't plan on touching the money often. So having the highest rate makes Everbank a strong contender for an A or B ranking. However, keep in mind reviews on the app are mixed and the bank doesn't specify if the 4.3% rate is promotional and only lasts for a short period of time. It's something worth asking if you're planning on chasing the highest rate on the list. With all things considered, I rate Everbank an A. Barclays Online Savings. Yes, Barclays is a UK bank, but their US online savings account is FDIC insured and pretty competitive. The current APY is around 3.7%. There's no minimum balance and no monthly fees. And yes, it is FDIC insured. Now, keep in mind because Barclays is UK based, there are no physical branches in the US, but customer support is decent. At least that's what people say. And here's what's in the fine print. Transfers to and from external accounts can take a few days, and there's no checking account or ATM card to pair with it, which, in my opinion, is a good thing. It's best for those who want a simple, no-frill savings account that earns more than the average without any hoops to jump through. Considering Barclays is not US-based, it has a middle-ranked interest rate, but it's a true savings, I'll rate Barclays a B. Basque Bank Interest Savings Account. Basque Bank may not be a household name, but they've made a name for themselves in two circles: frequent flyers and high-yield seekers. Originally known for offering American Airlines miles in place of interest, they now also offer a more traditional interest-bearing savings account that competes with the best of them. The current APY is around 4.2%. There's no minimum balance to open or earn interest and no monthly maintenance fees. And yes, Basque is FDIC insured, although through another bank called Texas Capital. Regarding customer service, they do offer online and phone support. There are no physical branches. And here's what's in the fine print. Transfers can be slightly slower than what you find at a more mainstream bank, especially for larger sums. The interface is clean, but pretty bare bones when it comes to the app, so don't expect a bunch of budgeting tools or flashy features. Also, this is strictly a savings account. No checking, no debit card, no ATM access. Few advantages. Super competitive rate. No fees, no balance, no hoops to jump through. Great for stashing cash you don't need to move around often. Here's some things to consider. Very limited account features. There's an app that is pretty bare bones, hoping that they do some upgrades. They're a newer player in the game, so you might not find as many reviews. It's best for savers who want a high APY without needing day-to-day access or advanced banking tools. Think of it as a digital vault for your money with a surprisingly high yield. An A rating, period. Higher rate, a mobile app, no gimmicks, helps with creating a savings vault. What more do you need? Now let's talk about something that a lot of us are still doing: parking our money in traditional savings accounts at one of the big banks. Think Bank of America, Wells Fargo, and Chase. If that's you, no judgment, we've all been there. But once you see the numbers, you'll probably want to start moving that money somewhere it can actually grow. So let's break it down one by one. Bank of America Advantage Savings. The current APY is as low as 0.01%. There is a minimum balance to avoid fees, and that's $500, or linking a checking account to your savings account and having a monthly transfer. Few hoops to jump through. There is a $8 monthly fee unless requirements are met. Now, what you will find with these traditional banks is that their customer service is pretty top tier when it comes to the 24/7 phone support, the mobile app, and strong physical branches. That's the thing that they do have going for them. This savings account does provide overdraft protection if linked to a checking account, and it also allows automatic transfers. But here's the catch. That interest rate is basically nothing. If you had $10,000 sitting here for a year, you'd earn $1. Yep, $1. It's best for people who really need in-person banking or are just starting out and want everything under one roof. However, I personally would suggest or recommend, just based on my experience, having your checking and your savings at different institutions, because you want to put some friction between your tendency to spend and your tendency to save. But honestly, you're paying the bank more in fees than they're paying you in interest. Clock that. That money could be working so much harder in a high yield savings account. So for this reason, I am rating it an F. Wells Fargo Way to Save Savings. The current APY is 0.01%, and it may increase slightly with linked accounts. There is a $25 minimum balance required to open, and there's a $5 monthly fee unless you keep $300 in that account or set up monthly transfers. The customer service, as we know with these traditional banks, usually offer online and phone support and have solid apps, right? So that's no surprise. With this savings, you will be able to get automatic savings tools, overdraft protection, and account alerts. But that's stuff that's pretty standard these days. Now, this one's marketed as a starter savings account, but even as a beginner, you deserve better. The interest rate just doesn't move the needle. It's best for folks who want to automate savings or need a simple companion to their Wells Fargo checking account. Side note, keep it separate. But again, you're earning pennies, like literal pennies. And so for that reason, this savings account gets an F from me. Chase Savings Account. The current APY is 0.01%. Some accounts offer between 0.02 and 0.05% if you jump through a few hoops. To avoid a fee, you need to keep a minimum balance of $300 or $25 automatic transfer from your checking. There is a $5 monthly fee unless it is waived. And as we know, with customer service, you get access to branches, you have the mobile app, and you also have online and phone support. Now, this savings is goals-based. They do also offer overdraft protection if linked, and it's best for Chase loyalists who want to keep everything in one place. But here's the real talk. That $10,000 you got sitting here will earn you about $1 all year. Meanwhile, someone with a high-yield savings account at 4.5% is earning $450 compared to your $1 just for letting it sit there. So for this reason, I'm rating Chase an F. So what's the bottom line? If you're using a savings account from one of these big banks, you're not really saving, you're just storing money and paying them to do it. There's no shame in starting with a traditional savings account, but once you know better, you do better. I actually personally started with one of the big three banks when I had my savings account, and then I realized the benefit of the HYSAs, and so shortly thereafter, my money was moved over. That's why it's time to move your savings to a high-yield savings account, especially if you're trying to build an emergency fund, save for a trip, or just want to make your money work a little harder for you. The difference isn't small. We're talking about hundreds or even thousands of dollars in interest over time, depending on how much you're saving. And the best part, you don't have to change your lifestyle or work harder. You just switch where your money resides. Where the money resides, where the money resides. So now that we've broken it all down from flashy fintechs to big name banks, I want to hear from you. How would you rank the high-yield savings account you're currently using? Is it giving you the returns you deserve? Or did you spot a better one on this list that's got you thinking about making a switch? Be honest, are you getting that 0.01% or closer to 4%? If there's a better option out there, and let's be real, there probably is, don't be afraid to move your money. This isn't about chasing rates every week. It's about being intentional with where you park your hard-earned cash, because your savings should be working just as hard as you do. If this video helped you think differently about where you save, go ahead and tap the like button and share it with a friend. Or drop your favorite high-yield savings account in the comments. I'd love to compare notes. And if you're thinking, okay, now that I know where to save, how do I actually start stacking real money? Watch this video that walks you through how to save your first $10,000 in 3 easy, realistic steps. No skipping lattes, no side hustle pressures, just smart, doable habits that add up fast. So click here to watch.